Jeremiah Boucher, a commercial real estate investor with over 20 years experience. This show is designed to help you build your business, become a better real estate investor, and help you see opportunities that will keep you ahead of the competition. This is Finding Your Edge.
Hey guys, Jeremiah Boucher here, Finding Your Edge. Find that edge. All right, so I'm in New Jersey. I'm with my boys, long time. I've known these guys. So I started out with the Commercial Academy with Scott Shield. This guy taught me how to grow my business. He taught me everything. I didn't know anything in the beginning, but this was the foundational, I guess the guy that really brought the foundation to me to learn commercial real estate. So what I did here is I rented out a studio. We're in a roundtable discussion. I got Tim Wilkins, my partner. I got Jared Elmar. He's here. You'll learn all about his story. Demetre Booker, these guys they're monsters in the industry. I got Marty Grizzanti here. You know who that is on the show. So what I want to do in here is really break down, not only the business, because, we can talk shop about tools and tactics and strategy. But what I'm excited about right now, because we're sweating our fucking ass off. It's hot as hell. But I want to get to the heart of what really drives these guys and really what is their edge. Because this whole podcast, this episode, and really the whole theme of the show is, what is your edge, your definitive, your skills, I guess, what drives you, and then how do you beat out the competition? So these guys came from nothing, they're hustlers like me. They all have their own stories. So I want to know what the fuck makes these guys tick. So I'll just open it up, man. So, you guys want to introduce yourself and then kind of give a little background of who you are, what you do?
Absolutely. What's up, Jay? This is Jared Elmar. Yeah, I feel like we could do some hot yoga in this place right now. It's good. I feel like pumped up here. Yeah, listen, I mean, we all kind of got our start, at least the evolution from residential to commercial from the same place, through Scott and through a course that we invested into. For me, it came down to not having it. I've used this analogy a bunch of times. For me, it's like my analogy is the Cuban refugee that leaves Cuba in an inflatable raft going through shark-infested waters, trying to get to the tip of Florida because he only heard how great it could be. And he had no idea. He just knew it had to be better than where he came from. And for me, that has been, it's the fact that I never had it. Because I can't really put my finger on why I have any drive, tenacity, and grit with my upbringing, how I came up. I think it was just me having this big ass chip on my shoulder because I didn't have it. And I was pissed off for the first 25 years of my life. And there was just no way I wasn't going to make it. Now, I didn't know it was going to be real estate. That turned into my vehicle to change my life, to change my family's life. And now it's just a way to keep score. And I have my bigger why, which is ultimately to give all this shit away well beyond my family. And the charity begins at home, but I'm all about the charity beyond that family.
That's sick. And what's your asset class? Like, what's your core business, just so everybody knows?
So we are 2/3 of the portfolio is small bay industrial. We always say not all industrial is built the same. We're not doing the big box logistics and 3PL Amazon type industrial. We're doing, we call it the cream of the crop. It is small bay, non-credit tenants. If I buy a 200,000 foot complex, I have 70 tenants to deal with. Now, it's much more management intensive. I don't have credit with those tenants, but I also don't have concentration risk with any one tenant if they bail out. So if I have 3 or 4 guys that go out of business or they need to consolidate space, it's very easy to backfill 1,000 to 5,000 foot boxes with new tradesmen, distributors. So for us, it's mitigating the risk. So we could build an infrastructure around the management intensity of it, but it is, I don't want to have this concentration risk where I lose one tenant and it affects my cash flow. It affects my loan covenants. It's how I've decided to scale, and there's a million different mousetraps, but for us, that made sense. And it took a while to get there. We started with multifamily. I made the mistake of getting into Class C. I had a murder within a month. I had fires. I had strong arm robberies. I had a fucking truck go through a building because the guy didn't put it in park and went right through a living room. And I've had every problem imaginable, and I felt that I couldn't scale with multifamily, but yet I was on ground zero buying multifamily in 2010. I looked into retail. I looked into office and industrial, and I've owned all that. When it all came down to what I felt I wanted to scale with and what I felt the most comfortable with the least amount of moving parts and complexity, it came down to small bay industrial.
Nice. Well, we'll get into that because I want to know more about that. I think there's a huge edge in that asset class. That seems to be the flavor of this investing kind of cycle we're in right now. That with storage, and we'll get into that. So Demetre here, I want to give us your background, man, and give us your core business plan, and we'll dig into it.
Love it, man. My name is Demetre Booker, principal founder of Elevate Commercial. It is fucking hot here, man. That is blazing hot.
We got an intro like that every time.
My background is I'm from Fresno, California, and I grew up in a broken household. My parents split when I was 3 years old. I spent most of my youth going back and forth to my mom's house and my dad's house, and there's a lot of anger, which led to sports. And I developed a liking of football, and so I played football from youth all the way up to college. And where I'm from, it's either you're going to make it in sports, you're going to make it in being an artist, or you're going to entertainer, etc. But in business, like, no one sees that shit where I grew up. And so, but I was always, my dad, similar to Jared, my dad would hand me Forbes magazines, and I would read and look at it. My dad would drive me by houses when I was a kid, and I was just driven. And so when I got to college, one of my teammates happened to be in commercial, his parents was in commercial real estate. And right then, that was my connection. And once I got exposed to it, I was like, they fucked up. They showed me commercial real estate. And fast forward, currently, we own over 1,000 units of housing. We invest in multiple asset classes. We're developing a brand for a model for hotel conversions. So it was just, always say is they gave a kid that had nothing from a poor, broke family an opportunity, and I took it around with it.
That's sick, man. Love that. Yeah, love that. Come up, Marty. So, you guys know a little bit about Marty's background, but tell us where you're at right now. What are you doing? Where you at with your career? How old are you? And what are you focused on?
Hell yeah, it's good to be here. It's good to be in the sauna with you guys. Welcome back to the Sauna Podcast with some absolute juggernauts in this room. No, I mean, I think I followed a little bit like with Jared, residential. He was talking about that today, and you just couldn't really scale it. I mean, we can't. And so we built up that portfolio. We started flipping. Love the cash. I mean, it's great, but it's not life-changing money. It's not generational changing money, and that's what I want to do. That's what I want to provide for my family. So, that's why I joined that commercial academy, and it's really the network that is so important. I mean, I think you would agree. I think all of us would agree that net worth, your network is your net worth. And so I'm just keeping that in mind. It's important that, you can give value as a guy like me. I'm 33. I don't know. I'm like what you were saying. I didn't know anything. I don't know anything, right? But I know one thing. My edge is getting on the phones and finding the deal. I don't know how to analyze it yet, but I'm going to, right? So that's where I'm at right now, but I'm ready to go.
Where are you from?
Rochester, upstate New York.
Okay. And what are your parents, middle class? Or?
Oh, yeah. My dad was a teacher. He started actually as a custodian, and then he became a principal at that school. So, one of the things with my family, my mom's a nurse, is that, when I hear your guys' stories, one of the things is I don't have, there's no excuses, because I had a really good family. So I'm like, these people came from nothing, right? So what's my excuse if I can't at least get around that same hemisphere as these dudes, right? So I'm going to make it. I'm going to do it, but there's just no excuses.
Yeah. But your parents weren't in business.
No.
Okay.
Yeah. No, they're just, they were just, anything I do, there's just, they're impressed by.
Yeah.
So, this is all beyond their wildest dreams, any of this stuff.
That's awesome.
You're right. Absolutely.
We got to get Tim in here. I'm sorry. I know he doesn't want to do this, but he's going to have to do it.
Well, it's nice and cool in here, like everybody's mentioning. Yeah, so Tim Wilkins, partners with Jeremiah. My background, a little different than theirs. I kind of grew up middle-class neighborhood. Parents both were actually in development and construction. And so I kind of grew up with this, but I took the safer route, went to school, did construction management, worked for a general contractor, And I was really comfortable making $100,000 a year at 25. Thought I had it made. I thought I knew everything. 10 years later, or 5 years later, I started flipping houses. And so I think that was the evolution, was I kind of got the hunger of doing something else and getting out of my comfort zone. And like Demetre, I played sports. Jared and I played sports growing up. I fucking love winning. I hate losing. And Jared knows this. I'm a terrible loser. But that really pushed me to, in the business sense of whatever I was going to do, I was going to fucking win. And so, teaming up with Jared has really kind of stepped my game up, and me as a person, of who I am as an individual to the business sense, it's all gotten better because of Jeremiah.
Man,
But don't fuck yourself for making me.
I could.
See that dynamic, and I agree. I've seen, I got to know you over the last year and a half, but the dynamic, I could tell it's very much like me and Aaron, right? I found my number two. I found my partner, and that idea of running 120 miles an hour, granted, looking up every once in a while, but the other guy running 60 miles an hour, that is an amazing dynamic. He shits all over every deal we ever bring up.
So does he.
We ever bring, yeah. He's like, this is why all the reasons, glass half empty all the time. But he's a realist. I'm super optimist, and I could tell that's kind of the dynamic. So the minute you guys joined forces, and we had a conversation, we were going to buy some of your properties. Right away, I'm like, all right, this is going to work.
Yeah.
So, for sure. And here's the unbiased party, watching this evolution of you guys.
Thanks.
Been awesome. Been awesome to watch you guys grow this.
Yeah.
I like it a lot more. It's hard doing it solo, man. Yeah.
I finally got my number two, right? So, and it's a progression, but I saw when you were by yourself, and I remember sitting in your office in Vegas and in your condo, I was like, damn, this sucks for JB, right? And so seeing the collaboration between you two, you have someone that balances out what you do, which you're like a Tasmanian devil buying deals, and you move fast, and so you got someone that can balance out and capture all that shit.
Yeah.
And so I have a lot of respect for what you guys build, because it's been explosive the last few years, seeing what you guys do.
Yeah. Have you guys found, how in the beginning when people are starting out and trying to grow, it's lonely, right? We talk about that. Like, how do you do that where you felt like you weren't on an island, where you felt like, or did you feel like you're on an island and you had no support? I mean, what helped you when you were alone, doing it on your own, you didn't have a lot of resources? Like, I want to know what you two both, like, how did you tap into that? And did you have connection with anybody to help you get through it, or did you do it solo?
For me, other than, mentorship and having the foresight to look for somebody who knows a lot more than I do through, courses. And, I always talk about how much free shit there is on YouTube and how much great content it is. I feel like that's that movie. Remember Days of Thunder? With Tom Cruise, and he says, have you ever driven a stock car before? He's like, no, I watch ESPN. The coverage is amazing. That's how I feel about YouTube. YouTube gives you so much content. So I learned a lot through that. There's a course, but what really helped, what I would tell anybody that's trying to come up and now at a point where they really need help, they don't want to do the $20, $30 an hour work, is to find the admin person and find a bookkeeper. Those are your first two. Then you go to the number two. The number two changes the game. And I know I'm preaching to the choir. That really changed everything for me. But you can't be doing the $20 an hour work. You don't want to buy yourself a job. So that's if for anybody coming up, that's what I would recommend, is find that admin.
Did you guys have partners in the beginning? Did you have a partner in the beginning?
No.
Okay.
That was just me.
Yeah.
Yeah. So how I built my business, I was hyper focused on getting a few W's and then reinvested that money into infrastructure. And during that time period, I would pick your brain about, make sure you have an accounting person, and then you about, investor relations, asset management, etc. And so I just leaned on people who are 3-4 steps ahead of me for advice and mentors. But also I understood, I had a vision, I had a clear vision of what I wanted and what I did not want to do. And I slowly built a team around it.
Yeah, I'm glad you say that, man. Like, both you guys, admin and accounting, they're basics. They're not sexy. They're not fun to talk about. But, man, I hear so much hype on social media, and it's like, grow, and you don't actually tend to your garden. You don't take care of the shit you have. And then, really getting dialed in on it's not all about growth right away, master your craft, understand what you're doing, build up a track record, get some wins.
Yeah.
That's huge, man. And that's, Marty, I think we had some conversations around this where I know you want to grow and blow up the business fast.
And then I kind of checked you and said, hey, let's get that one deal. Let's get the one asset class and figure it out. So like, where's your head around what your next steps are? Because, I see a lot of me and you, Marty, like, in 8-9 years older than you, where I had a lot of energy, a lot of passion, a lot of commitment, but I didn't have a lot of understanding because I didn't have a background around it. So I'm curious your journey.
Well, that's why it's been so great, having these podcasts, listening to you, reading the book, and being a part of the creative or the commercial academy, because I've gotten by on just being able to find like residential deals. I'm really good at that, but it does not transfer over in commercial. Like, you're not going to find a motivated seller with a 100,000 square foot self-storage facility. It just doesn't happen very often. Right. So I think, as we've talked, we're going to double down. Like you said, what are you tripling down on? It's to learn one of these verticals very well and get some W's in that vertical. So, but I'm also an opportunist, and I like, I don't know what I don't know yet, but I also don't want to go down the paths of like where you guys go, hey, I already did that. You don't have to, right? So it's definitely self-storage. We got that one under our belt, and it's just how do we get better at analyzing the deals, making sure that we're, running this business, because the self-storage, as you have told me, it's, one of your aha moments was when you looked at it as an actual business, not just a real estate, vertical itself, but you're running a business when you have a self-storage facility.
Yeah.
So that's where I'm at right now, is just making sure that I'm getting this down, the one thing.
Yeah. So with you guys, when you start out, we talked about raising money. And what's your thoughts around raising money right now? What's your feelings about it? Like, how are you evolving in terms of, are you going to need to raise money on your next few deals?
Yeah, I think we've gotten pretty, I don't know if it's like lucky or if it's, because as we started with our flipping, we've had people come in and there are money people. We have a good group of money people from the flipping. And now we have like one guy who really takes care of everything. He doesn't want debt. He doesn't want equity in any of the deals. He just wants to have his money work for him. So I've been blessed that I've only had to work with 2 or 3 people. But as we grow, I know that relationship, he won't be able to fund everything. So I got to be able to know my numbers, because right now he's basically just venture capital for me, because he's like, I just believe in you. Wow. It's not I believe in the deal so much. Wow. So I got to get really good.
Yeah, but they're all going to be like that. Every investor you ever get, at a certain point, they're never going to even ask about the deal. You call them, they trust you, they trust the jockey, they're always going to bet on you. That was an eye opener, and it even shocks our office when we're raising $5, $6, $7 million on a project. I literally will send out a video for all of 2 minutes or 2 to 5 minutes, telling them why we like the deal, how we got the deal, what we're going to do with the deal. I'll tell you what, shoot me an email if you're interested, and I'll get you the investor summary. I got them already saying they're interested, and then within a week before they even get the docs, they're wiring funds. They're asking for the wiring information. That's what's going to happen for you. And it's going to be, it's a mushroom. It's a compounding effect where one investor tells another investor, and that new investor isn't necessarily trusting you. They're trusting the opinion of their friend.
Right.
And just so on and so forth. It's just amazing how organic, and that's the best way to do this.
First thing you build your track record. Right. You got the track record, right?
Absolutely.
Yeah. Jared, yeah.
But it only takes a couple to get the track record.
Right. Yeah. So, because I think about like, I want funds, and then, but then maybe I'm like, do I really want to do that? Like, that's a different beast and its own animal, and I'm not obviously there yet. But, how do you guys, now that you are, all right, you have that 1 or 2 people that funded some of your deals and they love you and they, they're betting on you. But once you get to, $6, $7, $10 million, raises, is it still the same thing? Is it those core people that you had that are now going to still be part of those deals?
A lot of them, the only time I've ever lost any investors, because they're all the same repeat investors, they just gotten, compounded. You are, in the beginning, you're a risk, right? It's a risk reward game. So you got to give a lot more away in the beginning. After you get a few under your belt where they're like, oh shit, he actually knows what he's doing. Well, now you could start working on building your business. Right now, you're a real estate investor. You're recently a real estate business.
Yes.
So you evolve from an investor to a business, and the only way once you become a business, you have to be able to support that infrastructure. And that infrastructure means that you need to get more of a promote. You need to get fees, ongoing fees that create. You are doing your investor a disservice, your investor group a disservice if you're not figuring out a way to fund your infrastructure. And you will never have anybody say, no, I'm not happy with you taking that fee. Again, this is where I really shot myself in the foot the first 8 years. I never took traditional fees that go along with your typical capital raise or syndication either. And I didn't take acquisition fees. I didn't take asset management fees. Thank God I had a great market that helped. I had the momentum of the market where I could flip a deal at 3 years after I bought it or something, and I made a big chunk of money. But if it just kind of chugged along at a reasonable interest rate, a reasonable rate of return, without those fees, I'd be working for free. And God forbid you actually have a correction, because that promote that we keep working toward may not exist 4 or 5 years from now. You have got to be paid for your time and your effort and that infrastructure. Your investors are relying on that infrastructure.
So initially you're going to struggle with getting your investors on board with paying fees. But as you build your business, 100%. Your track record, they will welcome it because they want you to have investor support. They want you to have the accounting and infrastructure. They want their tax, their K-1s on time. And so, like right now, our investors, we're doing a $5.4 million raise within a few days that we raise all the money. And it's the same repeat investors and their friends. And there's not one question about an acquisition fee because they know that we're not going to go to Vegas with the money. That money's being reinvested back into the infrastructure to build, elevate, and help elevate, right? And so that's the whole concept is how do we continue to build this infrastructure? And so they understand it costs money to run the business. And your mission and your interest is aligned because you're getting paid as on the promote end, and also you're putting money in the deal.
I think the big thing that you might want to think about is in real estate investing is raising capital. That's it. They're synonymous. Like you have to do it. I resisted it in the beginning. I thought I could be an investor and use my own money, and then at time just scale on a few properties, have some passive income. Me and Tim were just talking about this. Like there's fuck passive income because it's not passive, right? Like it's everything is active in this business. If you're going to get a deal, right, and we all know what a deal is, it's where in an inefficient marketplace, you go hustle, you go see value where other people don't see it, and then you go take down that deal and through relationships, and then you build a team around it, you maximize value. That shit is very active, and that's how we get superior returns over the marketplace, right?
Absolutely.
Very inefficient system.
Right.
That's what we love. That's why guys like you and I, and you and all of us here, we're not Wall Street guys, we're not Ivy League guys. We like inefficiency because that's where we can find our little niche and our edge in this market. And that's why people want to invest behind us because they go, shit, he's got some energy. He's got a decent vision. He's got a decent idea. Small bay, manufactured housing, self-storage, put some money behind it where I don't have the time to go do it. Now you go do it and, give me a good return before you make some money. So that, to me, that's a good alignment of interest where I don't feel bad about selling it that way to other people because I know, I'm going to make you money before we make money. But, and a lot of investments aren't structured that way. But it was a long time. I felt really uncomfortable about that, to ask for the money, and I'd rather lose all my own money before someone else's.
Right.
But,
100%.
right? So, but that was an emotional thing for me. That was a tough inner thing for me to deal with, to go out and, it still is not easy to ask people for money, Yeah. But how do you guys feel about that? That's still a part of the business that's challenging.
I mean, I might be an anomaly. I enjoy it. That's my favorite point of business. I like raising capital. I do. The fees, I will, just one last part on the fees. I guarantee you, and I know you'll agree with me, and you already know this, you don't make money on the fees. It's like in the beginning, you're thinking, wow, okay, if I can make 50 grand on asset management fee and I can make 150 grand on the acquisition fee, and then I got loan and leasing fees and construction fees and renewal fees and disposition fees, you don't make money on any of that shit because as you're getting those fees, you're pumping it in, you're building an infrastructure. If you really want to be a business, right now we have, I don't know, $1.4 million a year coming in fees, just fees on our existing portfolio. Jared doesn't get any of that. It goes to the office. It goes for higher salaries. It goes for bonuses. That I'm working for that promote, but I don't want to go into my pocket to go chase a promote that might not be there. I at least want the company, the partnerships to support our infrastructure.
So you're doing a disservice to your investors if you're not getting fees.
100%. Yeah. And listen, you got tired of feeding the beast too. I mean, every single month I'm out of pocket feeding my overhead. Overhead walks on 2 legs. I realized that very quickly once we actually built a decent sized portfolio.
But I think the common theme with everyone in here is that we fed it back in, we put it all back in, we paid it back. You know, every time you got a couple $100,000 or $1 million in the bank, you know, especially D too, you know, you knew you had that, wins, and then you decided, you know, am I gonna pump this back in, or am I gonna just go solo and take the money?
I pumped it back in. And going back to raising money, I mean, I feel very comfortable asking for money because I know we have the right mission, right? Our social impact platform. I know that we produce and we are successful in our returns, and I know that we are really good at underwriting deals. And so we know how to extract value in those deals that others can't do. I could take a manufactured housing community and I'm excited. It's like a football game for me. I rub my hands. I think it's the first quarter where we're playing a rival. I'm pumped up because I know we're going to tear that shit apart and extract value out of it. And I know that my investor's going to make money, and every time they invest with me, they're going to invest again. So for me, I feel very comfortable taking money because I know what we're going to do, and I'm just looking forward to getting on the field and play ball.
I like how you guys do that because to me, I want to talk the deal. I'm like, we got good tenants, good market, good metrics, low cost basis, good value add, market's good, all that shit. Like I can line up the deal, put it on paper, tell them, you know, and sell them on the deal, and
that's it.
But it's not. Now where I'm at in this career, it's the image, the status. Like you guys are good, man. Like, how do you do it where you build rapport, you're coming in, you don't know the person that well, how do you get in and actually get them to?
I got the perfect answer for you because this is what I go in on every deal. Now it's going to take some time for you to get to this point, but either you're a buyer or you're a seller, and I am not a buyer. I'm sorry, I'm always going to be the buyer. So when I'm talking to a potential investor, I'm the buyer. You tell me why I should take your money. And if I feel any hint of, issues or somebody that's just going to be more trouble than they're worth, I'm like the soup Nazi in Seinfeld. No investing for you 1 year. I'm at a point now, and that's the great part about it. You get to pick and choose who you do business with. It is the greatest part of our industry. And I always go in with that mentality. Either you're the buyer or you're the seller. We're so used to selling, right? That's just, and it's it's our instinct, especially entrepreneurial A-type personalities. We want to sell. That's like, I want to convince you why I'm the shit. No, we're the buyer. You ask them questions. Say, okay, listen, we're in hot pursuit of a couple deals. I'll make sure you're on the list. Let them know that you're a commodity, dude. That's the way it needs to be. Now it's going to take some time. But if anybody wants to challenge me on, why should I do business with you? It's like, here you go. This is what we've averaged in 11 years, 30% IRR. Go ahead and find somebody, just like you said. We go after inefficient markets, inefficient, management, fixable holes in the deals. And there's so much real estate inventory out there on any given day to hit our inbox. That's nice, clean, coupon clipping shit that people 1031 exchange into, thinking that it's walkaway property until they lose that tenant. That is not the type of model that we're not in that model. We're looking for the mom and pops that have been very complacent on their properties. And it's a lot of work. It's a lot of work to find the deal, let alone actually take it down and take it to the finish line. So for all of that, God damn it, sell me on why I should take your money. And I just did all the hard work. That's the mentality as you raise money.
At the game, love it. At the game,
That's a good one. How about you, Deke? Yeah, I mean, ask, man.
It's for me, it's originally I was buying deals by just brute force, right? Just buying and forcing appreciation, forcing opportunity. But now our whole team, one of our core values is play with fanatical effort. Got that from my football coach who's out with the Detroit Lions, David Phipp. And so our whole team plays with fanatical effort, and our investors know we play with fanatical efforts. When I meet a new investor and they say, hey, tell me about yourself. Hey, one thing to tell you up front, we play with fanatical effort. If the market turns, we're going to fight. We've been through a bad market, great markets. We're battle tested. We're hungry. We're focused. And we're going to do our best to make this a success for you. And I don't know anyone else that they know that's going to fight the way we're going to fight for their money and our money together. We're in this together. And if we can align on a partnership, I look at it as a partnership. We're partnering together. We're both trying to build generational wealth together, and we're aligned together. And it just so happened we met each other through a mutual friend or a contact, but we are aligned. We're partners in this together, and we got one mission: create generational wealth, and do good shit. And that's why I look at when I go into it, I have to tell myself that in advance. Hey, I'm going to do great shit. I'm going to take care of people. I'm going to be fair. Also, we're going to create generational wealth for ourselves.
Did it take you guys a long time to build up the first base of investors? Like, how long did it take both you guys? Where you had a predictable investor, where you could raise, $500,000. Really?
I think that's the hardest part is your first deal, because you really aren't polished. You really know your deal so well. You can't talk the talk. I mean, it's hard to sell your product when you're just still learning the product. So that was the hardest thing. But it's amazing how fast, you were all going to be quick on the uptake because we're passionate about it and we actually want to learn as we do a deal. I learn on every project I do. That first deal was tough. To the point that I couldn't raise the full amount. I had to give extra equity to the guy who had the network to tell his friends, and they trusted him, not me. And they just knew I was a young hustler that was willing to put the time in. And he vouched for me. So he really helped me. And that's how I raised the first deal. The second deal, those guys wanted to do business with me direct because of the communication. And that was the first time I realized you don't necessarily always have to deliver double-digit returns to your investors, but you have got to be fully transparent and very much communicative with them. So I figured out ways, technology's great, to create better communication, better than the other operators out there. No fucking written reports, no financials. I mean, we do that too. But, we do video updates, 5-minute, 8-minute clips every single month on every single deal. YouTube videos, me just in a ring light saying, hey guys, it's April 5th. This is what's going on in this property today. We're 87% occupied. Don't forget, we started at 75%. We got an LOI out for that other 5,000 feet. We're ahead of projections by 6 months. And that's it. And they're like, don't even send me reports anymore. That's what I want. We want you communicate more than any other sponsor we've done business with. That was 11 years ago, and we've refined it a little bit, but I still do those monthly updates. The communication was everything.
Love that.
Great feedback. It's dope.
Everything you've done, Jared, you did a fund, didn't you, or has everything been syndications?
90%, 95% has really been syndications, one-off deals. We've raised the money once we find the deal so they can see, touch, and really feel the asset. We started a fund model before rates got out of hand. Cap rates didn't move like rates. So we put one deal in the fund. It was going to be a net lease fund where it was kind of set and forget it, so to speak. We realized that we can't get comfortable with single user net lease national credit tenants, especially after the pandemic. So that changed things for us. They were the ones that motherfucked you. Is the national credit tenants, the Rosses, the LA Fitnesses, the Cheesecake Factories, and the QSRs. I remember our boys Frank and Anthony in Philly were talking about their Wendy's deal in the middle of the lockdown, right after the lockdown rather. Wendy's there was cars around the block. They were crushing it, and they sent the letter to all their landlords: "We're not paying you rent until further notice." Ain't that a bitch? They're doing more business than ever before, and they just say, "Yep, we're not." You guys are the reasons why we're paying such a high value for your lease. You guys are supposed to be the ones that when the shit hits the fan, we don't have to worry. You're checking the mail. But yet the little guys were the ones who try to make everything right in the pandemic. That was an eye-opener.
For more information on commercial real estate investing, go to patriotholdings.com. Thanks for listening to Finding Your Edge.